makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. President Biden appeals directly to Americans to support funding for Israel's war efforts, warning that Hamas and Russia pose parallel threats to U.S. democracy. Fears of a weekend escalation in the Middle East drives gold higher and oil passes $90 a barrel. And then the Fed Chief Jay Powell signals a November hike is unlikely, but keeps future rate increases on the table. Treasuries rise, but the 10-year yield remains close to 5%. So let's take a look at the European market map. Again, a lot of the political risk playing out in the markets. We're seeing across the board equities falling. Investors really trying to respond to the threats of a weekend of escalation in the Middle East conflict. The FTSE down 0.4%. The FTSE MIB over in Italy down 1%. The focus firmly also on oil, trading above $90 a barrel. Gold actually approaching some $2,000 an ounce. Again, this is after we also had multiple reports from the Pentagon about drone attacks in Iraq and Syria. Look out from the risk premium in the price of gold. And that's, of course, moving U.S. 10-year yields, as with other Treasury yields, the U.S. 10-year for 9.350. So President Biden warns that Hamas and Russia's Vladimir Putin pose parallel threats to U.S. democracy. He appeals to Americans to support funding for Israel and Ukraine's war efforts.
Hamas and Putin represent different threats, but they share this in common. They both want to completely annihilate a neighboring democracy, completely annihilate it.
Let's get the latest now from Bloomberg's Oliver Crook in Tel Aviv. Oliver, a rare Oval Office speech from President Biden. How has been this taken? What else did he say?
Yeah, so Francine, a rare, as you say, address from the Oval Office, really reserved for the more solemn and more important messages that the president delivers, and delivers directly to the American people. And one of the questions he asked sort of rhetorically but set out to answer is, why does this matter to the United States? And the point that he made was, when both with dictatorship and with terrorism, they need to pay a high price because there is no sort of limit to how far they will go. And he appealed directly to the American people, in part because he's also going to be asking the American people for a lot of money. We understand more than $100 billion. And we have some reporting on this, on where that money will be spent. We understand that $60 billion of it would be for Ukraine, $14 billion for Israeli defense, $10 billion for humanitarian efforts, including Gaza, $14 billion for the efforts to secure the southern border and to deal with fentanyl trafficking, and $7 billion for other national security concerns around the world, including the Indo-Pacific and Taiwan. It also came with some warnings to Israel. Again, he evoked 9/11, saying that a lot of mistakes were made in the United States and Israel should not act out of rage. He also talked about the Palestinians, saying that basically just because of these attacks from Hamas, that does not forfeit their right to freedom and to live peacefully and out of danger. But that being said, we are now entering the 14th day of this conflict, and the aid is still sitting at the southern border of Gaza with Egypt, has not yet crossed through Rafah.
Oliver, what's the latest on the ground that we know of?
So we understand that there have been more strikes on Hamas, more strikes within Lebanese territory on Hezbollah as well. We're also hearing from that the United States is saying that there have been more attacks on their installations in Syria and Iraq. And we also understand that the U.S. Navy has intercepted some missiles that are coming from Yemen, apparently directed towards Israel. There is a small matter of a very large and very significant country that sits between Yemen and Israel, and it is Saudi Arabia, which is why our attention now turns to what we understand is a summit that is still very much up in the air in terms of detail, that will be held in Cairo tomorrow, starting from 10 a.m. And again, according to sources familiar, and we should say all of this is in flux, we understand it will be attended by the Crown Prince of Saudi Arabia, Mohammed bin Salman, the President of Turkey, Erdogan, as well as the King of Jordan, the EU Council President, and the foreign ministers from the UK, Germany, and France. And this we need to see, and again, the main concern here is going to be preventing spillover, and how do you deal with some of the refugees in Gaza, but also getting aid into Gaza.
Oliver, thanks so much. Oliver Crook there live in Tel Aviv for us. Now let's look at this potential broader geopolitical implication of a conflict. The Pentagon says America is seeing stepped up drone attacks in Iraq and Syria. Meanwhile, a U.S. destroyer in the Red Sea has also intercepted cruise missiles and drones fired towards Israel by Yemen. So let's bring in our Bloomberg News director for the EMEA region, Roz Matheson. So Roz, thank you for joining us. When you see these escalation of reports of drone attacks, everyone is on high alert. Again, how does this escalate? It feels like it's at boiling point.
Well, that's right. In fact, though, drone attacks and similar things on U.S. bases in Iraq where U.S. troops are stationed and so on, things being fired by Yemen, that's not unusual. That happens quite often. But in this environment, of course, it's just feeding into that broader concern about contagion if there is a ground war inside Gaza soon by Israel. And what does that mean? We know, of course, the U.S. ships intercepted those missiles and drones fired by Houthi forces inside Yemen that seem to be going towards the north, potentially towards Israel. And the fact they intercepted those missiles, does that show us the risk, again, the US militarily could get drawn into a conflict in the region? So certainly those things taken together, the risk to energy infrastructure from all of these drones that are flying around, missiles and so on, the US military, it just adds up to that wider concern.
Roz, I don't know what you make of the rare Oval address, actually, by President Biden, casting Russia and Hamas as parallel threats to democracy. It doesn't feel like it's trying to de-escalate.
Well, certainly the US, again, the rhetoric has been very, very strong towards support for Israel in recent days. We saw that with his visit to Israel. We saw it in the visit by the UK Prime Minister, Rishi Sunak, also, talking about Israel, wanting Israel to win in this, for example, by the UK. So certainly, if anything, if you're the Israeli administration, you're taking that as a green light to go ahead. And they've said that they understand that Israel feels the need to respond to the attack on October 7. The question is, are they trying to coax Israel behind the scenes into a more targeted ground invasion?
Rose, what about some of the, I guess, energy infrastructure could be targeted? Is that a serious threat?
It is certainly. Right now we're seeing oil move more and just the sort of broader general political risk around all of this alongside other global markets. But the risk is, of course, with Iran involved. Iran's a big oil player in the region, and so are some of the other big states that are nearby. And, of course, Iran has said repeatedly it's prepared to target energy infrastructure. We're talking about oil tankers going through the straits in the area, right? And so any of that does become an elevated risk, because then we're talking not just about how markets are perceiving risk, we're talking about oil supply, which is a tangible. And, of course, if oil supply gets disrupted, oil prices go up. We're in an environment already still of an elevated inflation. You're talking about a real potential big hit to the global economy.
Roz, first and foremost, it's also about humanitarian aid. There have been here and there, talks that things could get moving, but is this going to make a significant impact to the people that need it most?
Well, as of this morning, so far none of that aid is still going in, despite what we heard was an agreement to allow 20 trucks to start moving through that crossing, the Rafah crossing between Egypt and Gaza. No aid whatsoever. And even then, 20 trucks is not going to make that much difference when we're talking about the scale of the humanitarian challenge inside Gaza at the moment. We know the reports from inside Gaza are pretty bad in terms of, need for medicine, food, drinkable water, and so on. And 20 trucks is not going to make a significant dent in that, particularly if they're the only 20 trucks that get through in the end.
Roz, thank you so much. Roz Matheson, there, Bloomberg's news director for the EMEA region. Now, let's also talk about, of course, the market impact from these rising geopolitical tensions. With us is Paul Dobson. Paul, we were talking there about the potential hit also to infrastructure. But as we're continuing to follow this, unravel, and trying to figure out where this ends, what does it mean for where the perceived risks on the markets is? It seems like geopolitics is dominating everything.
Well, yes, it's one of the key factors. And good morning, Fran. I would say, that's part of what's dominating things. The other thing, of course, is the outlook for U.S. interest rates and Fed policy. And those two things, I think, are creating some interesting tensions and dynamics within the markets overall. So particularly this is playing out with when you're looking at the US Treasury market itself, where we've had rising interest rates at a time when you might otherwise expect for bond yields to be going lower, for people to be putting their cash into the bonds market, looking for it as a haven or a safe place to store your money, or possibly a hedge where you can get some price appreciation if the situation does deteriorate. But it's not been working. It's not been working because this is a Fed that's not minded to cut interest rates anytime soon. And if you're betting on a global risk event, you're betting that the mechanism for that is going to be that the Fed will cut, and therefore your bond prices will appreciate. The Fed's not having any of that right now. In any fact, possibly a rise in the price of crude oil, as Ros was discussing just then, would be inflationary and push the Fed to think about higher interest rates, not lower. So therefore, Treasuries not really working as that haven play, and that's having repercussions right across the rest of the investment landscape as well.
Yeah, and Paul, what we heard, of course, after those comments by the Fed Chair Jay Powell is actually what surprised me was a divergence, a quite big divergence between the 2 and the 10-year yields, amongst the biggest that the market has seen, I think, since March. What does that tell us about, again, I guess the bifurcation of what Treasuries could do on the back of some of the geopolitical concerns? We also need to get used to this idea that we're higher for longer, and I don't know how much of that is priced in.
Yeah, I think, well, the market is getting better at pricing that message in, but maybe not done yet. I mean, what the market took away from Powell was two things, it would seem. One, a November rate hike is off the table. He was talking about a patient approach. He was lauding or talking up the deceleration of the pace of Fed hikes this year, and how it pays to wait a little bit and see how that's playing out. He was also talking about the rise in longer-term interest rates and how that is actually helping the policymakers a little bit in terms of squeezing financial conditions. So there's a bit of a reciprocity here between the bond market and Fed policy, a bit of a feedback loop that's going on, a push-me-pull-you effect kind of thing. But what the market is doing at the back end is pricing in not only like a persistence of higher inflation that's going to mean a higher policy rate, but also a bigger risk premium because of the supply of bonds that's coming into the market, because of the spending, and because of what that means for, you know, the future outlook, both in terms of credit risk as well as in terms of monetary policy.
Paul, thank you so much. Paul Dobson there from our MLive team. Now, coming up, China offers a record cash injection to keep rates low for growth. So we'll have plenty more on that next. And this is Bloomberg.
We have a lot of challenges in the U.S.-China relationship. We do not have identical views on this particular position. Hamas does not support the two-state solution. Hamas supports the destruction of the State of Israel. China has taken a position of supporting the two-state solution, as has the United States. And so obviously, the focus here should be directed against Hamas.
Well, that was Nicholas Burns, the U.S. ambassador to China, speaking to Bloomberg's Stephen Engel. Joining us now for a look at the markets and geopolitics, Claudia Panseri, Chief Investment Officer, France for UBS Global Wealth Management. Claudia, as always, thank you for joining us. Geopolitics and, of course, Powell comments seem to be driving the markets. What kind of dynamics do you see in the next couple of weeks and months?
Good morning, Francine, and thank you for having me today in Bloomberg. So it's a very difficult combination between tightening monetary policy, Fed comments, which are highlighting the Fed that trade will stay higher for longer, and at the same time increasing tension in the Middle East. Yesterday's move on the bond on the oil yield, I think, is also linked to the fiscal situation in the U.S., where it's been announced an increase in defense spending, $100 billion. And the short term was just moving down because market is probably not expecting more rate hikes to come by the end of the year. So the tension between the long and oil price up, break-even also moved yesterday, I think is putting volatility on the upside. And we need at least a few elements out of the Middle East and some, let's say, less pressure on the oil price before seeing the market resuming back to the previous high, which probably takes still a few days.
So, Claudia, and you talk about these conflicting forces actually pulling on the markets, where do we end up? Is it impossible at the moment to actually call something because of the price of oil, because we don't really know if it's higher for longer, or certainly if we have more increases, if we've reached peak interest rates yet? And so how do you build a portfolio on the back of all of this uncertainty?
So first of all, we have been having energy in our mandates, in our strategy since the beginning of the year, and also since the last year. I think since we had the conflict between Ukraine and Russia, we understood that energy was a good edge for every geopolitical tension. Secondly, we are trying to be exposed less to equities, even if we have a neutral position, but having a big exposure to bond yield, not on the long end of the yield curve, but probably more in the middle, between 5 and 7 year duration. High quality bonds is true. There is some volatility around the yield itself, but clearly if you have a slowdown because the oil price is rising, the tension is getting even more concerning in the Middle East, at one point the bond yield should start to fall. There is something which is not discussed enough in the market actually. Everyone is discussing about the capacity of the Fed to hike rate, but people do not speak about the capacity of the Fed to inject liquidity again. I mean, quantitative easing is ongoing, the balance sheet has been shrinking, and we are getting back to previous pre-COVID level very, very fast. So the Fed could start to inject liquidity back and stabilize, reduce the volatility on the long end of the yield curve.
But so, Claudia, overall, what does it all mean for financial conditions? And is there a worry that the consumer will really slow down significantly? Maybe we hear also cracks, if not in the U.S., in other parts of the world in terms of labor market in Europe and the U.K., and that we see a downturn before the central banks can act?
Exactly. I think this is very important to look into financial condition, because while financial conditions have been easy despite this rise in the bond yield, now that you have energy price up, the dollar appreciate again, the market, which is down, volatility is up, financial conditions are getting very tight, and the Fed will be watching this very closely, which will also impact the Fed monetary policy. Financial condition is one of the elements that the Fed is looking at. That has already some impact on consumption. We see on the earnings season some companies saying that consumer is slowing, but is not slowing in the same way everywhere. U.S. is still up. We have seen the data out of this week and last week, which was still very strong. We feel probably a bit more bite into the Eurozone and outside the Eurozone. Yeah. And this is because the Eurozone is more linked to the energy price than in U.S.
Claudia, what would a policy mistake look like from central banks today?
For central bank, it's getting difficult because there is no enough, let's say, visibility about growth. People have been surprised on the upside in U.S. At the same, inflation is slowing down, but not quickly enough for the Fed or another central bank to cut. So they are a bit forced to keep this rate at very high level into a slowdown, which is the reason why markets are so volatile. But once again, I think the rate is one thing and the work down on the balance sheet is another. So central bank may start to balance the work between short-term rate and the long-term rate bond yield with some work on the balance sheet, and probably start to think about quantitative tightening in a different way.
Claudia, thank you so much. As always, Claudia Panseri there from UBS Global Wealth Management. Now, of course, throughout the hour, we'll have plenty more on the fallout from the rising Middle East tensions and, of course, the move on U.S. yields following Fed Chair Jay Powell's comments. Stay with us, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now let's get to some of the top red stories on the Bloomberg terminal this morning. And UBS is set to start its next wave of job cuts at Credit Suisse on November 6, targeting about 10% of staff. Well, that's according to Financial News. The report says risk, compliance and marketing roles are likely impacted. UBS declined to comment. Separately, the bank says the board of directors for the Swiss units of both UBS and Credit Suisse will be restructured and harmonized as of November 1st. Roger von Mentelen will be appointed chairman of both boards. In the U.S., Republican lawmaker Jim Jordan says he will seek a third floor vote on his bid to become House Speaker. That's after he abandoned a backup plan to expand the interim speaker's powers and buy him time to get more support from fellow GOP lawmakers. Well, Jordan fell short of the votes needed to become Speaker in 2 rounds of balloting this week amid objections to his hardball tactics and deep divisions within the party. Shares in L'Oréal have opened lower after sales in North Asia unexpectedly fell in the third quarter. Now, the cosmetics maker is grappling with a challenging travel retail environment around the world. The beauty company posted 11% sales growth overall, thanks to better than expected performance in North America and Europe. Intel and Siemens are pulling out of Europe's biggest tech conference after the event's leader criticized Western support for Israel following the Hamas attacks. While prominent venture capitalists, including eCombinator's Gary Tan and Sequoia Capital's Ravi Gupta, have also cancelled plans to attend next month's Web Summit in Lisbon. The event's organizer, Paddy Cosgrave, has apologized for his remarks. Coming up, President Biden has appealed directly to Americans to support funding for Israel and Ukraine's war efforts, just ahead of the EU-US summit today in Washington. We'll have the full details next, and this is Bloomberg. President Biden appeals directly to Americans to support funding for Israel's war efforts, warning that Hamas and Russia pose parallel threats to U.S. democracy. Fears of a weekend escalation in the Middle East drives gold higher and oil passes $90 a barrel. And Fed Chair Jay Powell signals a November hike is unlikely, but keeps future rate increases on the table. Treasuries rise, but the 10-year yield remains close to 5%. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. President Joe Biden is warning that Hamas and Russia's Vladimir Putin pose parallel threats to U.S. democracy. Well, Biden is appealing to Americans to support funding for Israel and Ukraine's war efforts. Let's get the latest now from Bloomberg's Oliver Crook in Tel Aviv. So, Oliver, just bring us a little bit up to date about what's happening this morning.
Yeah, so as you mentioned, the sort of main headline is out of Biden overnight because really appealing to the American people, trying to get their support, yes, for Israel, but also for Ukraine, and as a result, joining these two issues together, saying that both terrorism and dictatorship don't really know any limits, and that as a result, they need to pay the price. And he's going to the American people directly because he's coming next to the American people for a lot of money. More than $100 billion, we understand, is going to be the ask from the White House for a number of things. We also understand from our reporting, $60 billion of that will be for Ukraine, $14 billion of it for Israeli defense, $10 billion for humanitarian efforts, including Gaza, and then some more, sort of $20 million for various other needs for the nation and national security. He also came with a warning for Israel, saying, do not let rage blind you. You need to be very strategic about what your goals are with Hamas and to make sure that you're pursuing them and not missing them. He also spoke of the Palestinians, who he says have not forfeited their right to peace and to live undisturbed and not in a war zone just because Hamas has triggered this attack. Now, the question is what comes next? The ground offensive, we still have no clarity on timing. We know there have still been attacks in Lebanon, in Gaza by the Israelis, but also the fear of ratcheting up and of the spillover effects. We hear that the United States has intercepted missiles now coming from Yemen, and the question is, and the attention will turn now to Arab leaders who we understand will convene in Cairo tomorrow. We understand that will be with Mohammed bin Salman, the president of Turkey, and foreign ministers from a number of Western countries. And really there is going to be a question of de-escalation, but also how to get aid into Gaza, which is still not crossing the border.
Oliver, thank you so much. Oliver Crook there live in Tel Aviv. Now, the U.S. and the EU have reached or have yet to reach a deal on steel and aluminium ahead of a summit in Washington. Initially seen as a bilateral summit to discuss mostly trade relations, geopoliticals around the Israel-Hamas war have injected new urgency to the gathering. Now, for more, we go to our Europe correspondent, Maria Tadeo in Brussels. So, Maria, a summit under the focus of geopolitics, what can we actually expect?
Yes, Francine, very much. And today you have a big delegation of European officials in D.C. It is led by the head of the European Commission, Ursula von der Leyen, but you also have the president and the head of the European Council and the top European diplomat. And already the fact that he accompanied them on this trip tells you so much. As you say, this was supposed to be about trade, about business, but obviously it has been now, I'm not sure fully eclipsed, but definitely now fully engulfed and immersed in the geopolitics. And yesterday, to me, also striking in tone that the head of the commission repeated very similar to that line that President Biden took himself, saying at this point, we're looking at major instability in the world, and there is a common thread between Hamas and Russia. Let's take a look.
Vladimir Putin wants to wipe Ukraine from the map. Hamas, supported by Iran, wants to wipe Israel from the map. Russia and Hamas are alike. As President Zelensky has said, their essence is the same.
And that is Ursula von der Leyen, the head of the European Commission. Beyond that, too, Francine, she makes that comparison very similar to President Biden. She also said, certainly from the European perspective, there is now an urgency to get the humanitarian angle going. And then she also suggested, which is interesting and very aligned to the U.S., too, that at this point, it is clear that obviously relations when it comes to normalization of Israel and other Arab countries have been paused, but it would be a failure of diplomacy if Israel gets cut off from the region, almost suggesting that maybe at one point escalation may not be inevitable and you can go back to diplomacy in the region.
Maria, is there anything else that we should be looking at from the European side?
Yes, and it comes down to the trade. Again, the focus should have been the trade, but obviously the timeline has changed. But there are two critical issues that could come out of this meeting. Remember, there are still pending conversations on steel, aluminium, and also the critical minerals. The idea, Francine, and this is important, is that this meeting would bring about a deal on steel and aluminium. Remember, President Trump put tariffs on those two metals. Then the European Union retaliated. When Biden got into office, they decided to suspend it and review it. The idea is that today they would come with a permanent deal that would put an end with the saga. Having said that, overnight, Bloomberg News reporting that they are not close to a deal. And in fact, you may get to a situation where there is no deal on the steel and aluminium. That is known as the GSA. So yes, you see that on the diplomatic front, they are aligned, but maybe perhaps on the trade, not so much. And that points to the tensions that we see so sometimes on the made in America versus the made in the European Union.
Maria, thanks so much. Maria Tadeo there in Brussels with the very latest. Let's also just have a look at treasuries, because really this was the big story yesterday on the back of Jay Powell. Now, I think we have a board up, including treasuries. Treasury yields really underwent a pretty big shift in reaction to comments by the Fed Chair Jay Powell, with short-dated ones declining actually on the prospect of the central bank not raising its policy rate further, while long maturities climbed to new multi-year highs. Now, if you look at yields across the Treasury curve, it's risen to new multi-year highs earlier on Thursday. The focus is not only on Powell's remarks, but of course it's also on some of the geopolitical questions out there. Now, I would mention this. During the question and answer session following his prepared remarks to the Economic Club of New York on Thursday, Powell said policymakers were cognizant of the rise in long-term yields and broadly felt it was helping to tighten financial conditions. Now, to talk about geopolitics, joining us now is H.A. Hellyer. He's Senior Associate Fellow of the Royal United Services Institute. H.A. Hellyer, thank you for joining us. When you look at the risk of geopolitics, really from here escalating, it's unclear what the ramp-off would be like. Are you worried that geopolitics just bring more volatility with actually really anything is possible at this point?
I think that's a very reasonable concern to have. Of course, it depends on where we go over the coming few weeks, because there are different scenarios. If Israel continues to bombard Gaza in the manner in which it's been doing thus far. The risk for widening this to a regional conflict, of course, increases. If a ceasefire is come to and humanitarian aid is agreed upon and gets into Gaza, then the risk of regional expansion of the conflict in that regard diminish. So I think in that regard, it's really down to the decisions that are taken, particularly by the Israelis over the coming few days.
So what do you think will be the most crucial in the next couple of days? Do we know that there are back channels to try and de-escalate the situation and help the people that need it most?
There are back channels, but the problem is that there have been a number of agreements that have been stated from D.C. by Secretary of State Blinken and by others on things like getting humanitarian aid into Gaza through the Rafah crossing. And they've been announced several times now, but then the Israelis sort of balk at actually implementing the agreement. So even today, there should be convoys going through, by the way, convoys that are incredibly minimal. I mean, you need something around, according to the UN, I think it was around 100 different trucks every day in order to satisfy the incredible need that is currently in Gaza at the moment. And there was an agreement for something like 20 today, and they still haven't been able to get through. So I do think that part of the problem is that we're coming to agreements and arrangements, but there isn't follow through.
Who do you think could make a real difference in this? Would China get involved?
No, I don't think the Chinese or the Russians really have much play in this particular conflict. I think this is mostly an American and European conflict in terms of influence from the outside, and primarily from D.C. I think actually it was mainly due to visits by American and European officials and politicians to Israel over the past week, which has actually held back the prospect of a ground war, an invasion of Gaza fully by the Israeli forces. I don't think it's about Russia or China, quite frankly. I think the Russians are quite pleased to see the United States get somewhat embroiled in this crisis because it takes attention away from Ukraine. The Chinese, I don't think, are particularly interested in getting involved. I think they correctly recognize they don't really have much play on the ground in that regard.
What do you think happens in the next couple of weeks? Again, what's the risk to the upside and the hope for de-escalation?
I think the risks are very real because, you've had thousands of Palestinian civilians lose their lives over the past week. Of course, there's an incredible amount of anger within Israel because of the terrorist attack on the 7th of October by Hamas into Israel proper. You have an incredibly dire, and I mean incredibly dire, humanitarian situation unfolding in Gaza, which is, as your viewers probably know, it's an incredibly densely populated area, 2.1 million or so people in an incredibly enclosed space. The risk of Palestinian refugees having to leave Gaza, go to a place like Egypt and never be allowed back. This is also one of the factors that is driving public opinion in places like Egypt and Jordan, where they see the prospect of ethnic cleansing, at least in parts of Gaza, of Palestinians to be quite real. And frankly, they have historical precedent to rely on that. Drawing in other actors in the region, you have countries that were developing good relations with the Israelis, and they are now condemning the Israelis because of what's happened over the past week. You have the Saudi-Israeli normalization talks. They've not been officially suspended, but they're certainly on cold freeze. And I think it will take quite some time for them to get back to the place where they were. So Iran, of course, is in play. I mean, there are different factors here that could really spill out of control very quickly.
But unless there's sizable humanitarian aid that's being given now, are the risks that actually this escalates? And why is it so difficult to bring humanitarian aid to where it's needed?
So yes, there is that risk if we don't get humanitarian aid in and the civilian casualties continue to mount on the Palestinian side. I think you see increased pressure across the region for powers and governments to get more involved, and that can regionalize the conflict in a way that I think would be very dangerous. Why is it so difficult? I mean, frankly, because as I said previously, arrangements are being come to. And they're not being followed through. And I have to say, primarily on the Israeli side, the Egyptians have got the humanitarian aid waiting on the border. There's scores of trucks just waiting to go across, but the Israelis won't let them in.
Thank you for joining us. A.J. Hellyer, their Senior Associate Fellow at the Royal United Services Institute. And of course, you can follow us for more analysis and the crossover to what it means for the global economy. Coming up, the Fed Chair, Jay Powell, says he sees current policy is not too tight, leaving the door to future hikes open. What does that mean for the Treasury markets? Our MLive team joins us to discuss that next. And this is Bloomberg.
There's a lot of uncertainty around lags, and one of the reasons why we have slowed down significantly this year is to give monetary policy time to work. The truth is, though, you can find academic support for different speeds and duration of lag. So we have to use our eyes and a little bit of risk management and patience in slowing down the pace to make sure that we are seeing the full effects. And I think, again, that's part of why we've slowed down this year. We went very quickly in 2022 to catch up to where we needed to be, and now we're moving carefully with these decisions.
So when you spoke back in August of 2020 and sort of laid out the revisions to the framework, as it were, you said that in terms of anticipated growth, the sort of consensus had gone from something like 2.5 to 1.8%, I think were the numbers you laid out in that. Where are you now? Where's the Fed? Where are you? And what you think basically the long-run growth is?
Long-run potential growth is not something that moves around a lot over time, but I would, my own guess is it's around 2%. I think that the standard mainstream view would be a little bit below 2%, but I would just say 2% real growth over time. And what causes growth is growth in hours worked plus growth in productivity. Growth in hours worked is a function of population growth in the long run, and also labor force participation. Many things affect productivity, but if you drop in reasonable, standard, longer-term estimates of hours worked growth and productivity, which is just output per hour, productivity growth, you get something around 2%, and that's higher than most other advanced economies.
Well, that was the Fed Chair Jay Powell speaking to Bloomberg's David Weston. Now here with us to talk about all things Fed and also surging Treasury yields are Bloomberg MLive strategist Ven Ram. So Ven, thank you for joining us. I really enjoy looking at all of your analysis on the Bloomberg terminal. What's the real reason why Treasury yields are surging this late in the cycle?
Morning, Francine. If you decompose nominal rates into a real short-term rate, a credit term premium, an inflation premium, and a real risk premium, now obviously the credit premium associated with treasuries is zero. But what has been a bit of a surprise is even though inflation is elevated, when I ran the numbers, inflation premium is around the average it has been historically. So that's not contributing to the surge in treasury yields. So what is contributing to the surge is the volatility, which is measured by the real risk premium. And that real risk premium, as the chart shows, is elevated. And if you run the standard deviation on that, that shows a near 3 standard deviation. We don't get a 3 standard deviation move in something without it impinging on other assets. And that is what we are seeing playing out in the treasury markets.
So, Ven, what was your main takeaway from Powell's speech yesterday?
I think there were two key things that jumped out at me. One was the fact that he said that even though we have been tightening for a long time, there may still be meaningful tightening in the pipeline, which is kind of hawkish. And then he said, to good measure, that I think the evidence is not that policy is too tight right now. Hang on, the Fed has raised rates a lot in the cycle, and then the real policy rate, adjusted for inflation, is 290 basis points. That's the highest of any advanced economy that I'm looking at. And if the Fed says that, look, even now the policy rate is not too tight, that shows how hawkish the Fed is. And it also speaks to Powell's mindset at the moment. It speaks to the inner Powell in him. And that, to me, was the biggest takeaway from what he said yesterday.
Ven, thank you so much. Bloomberg's MLive strategist there, Ven Ramb. Now, remember, you can get up-to-speed analysis and insight from Ven and the rest of the team. Just go to MLive Go on your Bloomberg terminal. Plenty more to come. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, the pound dipped after UK retail sales tumbled more than expected in September. Joining us now is Bloomberg's Lizzie Burden. So, Lizzie, we also have comments from the Bank of England governor, but on the retail sales numbers, how do they play into the BOE's thinking?
Well, markets seem to have looked through those comments from Andrew Bailey saying that wage growth's uncomfortably high. They seem to be reacting to the retail sales numbers. And we've been waiting a long time to see cracks in the resilience of the UK economy. Here it is, under the weight of all of those rate hikes from the Bank of England. So retail sales falling more than expected in September. You did have this unusually warm weather in that month. And we know that Brits don't like to buy clothes when there's the slightest bit of sunshine. But it's not just to do with that.
And rightly so. Let's all go in the park to enjoy it.
Yeah, no, we get laughed at for it. But consumer confidence also saw its sharpest drop in this month since COVID. So it shows that as unemployment's edging higher, when you've got inflation biting into household budgets, it's really taking its toll. And so where does it leave the BOE? Well, this fall in the pound suggests that traders at least think you're going to have a more hawkish Bank of England.
At the same time, so Labour leader, so opposition leader Keir Starmer must be having a pretty good Friday after the by-elections.
Yeah, he must be skipping around his house this morning. This was the first opportunity to take the temperature of the nation after the party conferences and also ahead of the general election. And they've overturned two huge Conservative majorities in these two by-elections, really just to mark the scale of it. Mid-Bedfordshire had been Conservative since 1931. You've seen three wins for Labour in by-elections with swings over 20%. That hasn't happened since the run-up to the 1997 landslide under Tony Blair. So it is going to put a spring in the step of Keir Starmer. But on the flip side, to put some cold water on all of this, it isn't a national poll. We're still a way away from a general election. And Starmer's got almost twice as many seats to turn over than Tony Blair had in the run-up to 1997 because of just how badly Jeremy Corbyn did against Boris Johnson. Nonetheless, this is not the mood music that Rishi Sunak's going to want to be hearing while he's jetting around the Middle East doing his diplomacy or as he tries to set up his general election campaign. So the question must be, is it going to put the general election off right to the 11th hour till January 2025?
Lizzie, thank you. Lizzie Burden, Bloomberg's UK correspondent. Now, here's what else we're watching today. European Commission President Ursula von der Leyen and European Council President Charles Michel will meet President Joe Biden in D.C. for a joint summit for the first time in 2 years. Then at 1:30 p.m. UK, we get Canada retail sales. This is as inflation in the country unexpectedly slowed, leaving room for the central bank to hold interest rates steady next week. Half an hour later, the Fed's Patrick Harker speaks in Philadelphia about the U.S. economic outlook. And finally, American Express reports third quarter earnings. This is a picture for cross assets. We have seen quite big swings over the last 2 weeks. Today, equities are falling, responding to the threat of a weekend escalation in the Middle East. Now, on the back of it, we've seen Brent crude go up in the last 2 weeks, up 10%. Gold, also in the last 2 weeks, up 8%, with a bit of pressure over the last 2 weeks in the European Stock 600, down 1.8%. This is Bloomberg.